over 100 economists and academics have called on international lenders to write off a significant portion of loans taken by Zambia. This in the lead up to the financial restructuring negotiations involving Chinese, French and British governments.
Zambia is Africa's second largest copper producer. Copper prices right now are at near record highs, around $9,600 to $10,000 per ton as of December 2025. So why did Zambia default on its debt? And what does the outcome tell us about the future of African borrowing and Chinese lending? Zambia should be rich. 20 million people with massive copper production capacity. When copper prices are high, the money should be flowing. Infrastructure should be world-class. The economy should be booming. Instead, November 2020, Zambia became the first African country to default during the COVID era. Around $17 billion in total public debt. Couldn't make a $42.5 million bond payment. Economic collapse, political crisis, 4 years of painful restructuring followed, and Chinese creditors, holding around $3 billion in official bilateral loans, had to negotiate. Eurobond holders with $3 billion took massive losses. The IMF imposed brutal conditions. October 2024, a deal was finally reached, but it came at enormous cost. That's what we're unpacking today. How Zambia accumulated massive debt, what they built with it, why it all collapsed, how the restructuring played out, and what it means for African development. The story starts in the early 2000s. Zambia's copper revenues were strong. Copper prices were hovering around $7,000 to $8,000 per ton. The government saw an opportunity. President Michael Sata, who led from 2011 to 2014, had an ambitious vision: transform Zambia into a middle-income country by 2030, build infrastructure at scale, unlock economic growth, use copper revenues to pay back the loans. After Sata died in 2014, President Edgar Lungu continued the borrowing spree through 2021, and China was eager to lend. This was peak Belt and Road Initiative. Chinese banks were flooding Africa with infrastructure financing. The terms looked reasonable. Interest rates between 2% and 4% on average, far below commercial rates. Grace periods of 3 to 5 years before repayments started. Loan terms stretching 15 to 25 years. Here's what Zambia committed to build with that money: the Lusaka-Ndola Dual Carriageway Project. This involves a 321-kilometer road project launched in 2017, initially financed with a $1.2 billion loan from China Exim Bank, with China Jiangxi Corporation as the contractor. Jiangxi Bank provided an additional $187 million in linked financing. Kenneth Kaunda International Airport expansion, around $360 million from China Exim Bank at concessional rates with a 13-year grace period. Completely modernized Lusaka's main international airport, increased capacity significantly. Kafue Gorge, lower hydropower station. The crown jewel, around $2 billion. But here's where the model broke down. Infrastructure doesn't generate immediate government revenue. That highway doesn't directly pay taxes. The airport generates some fees, but not billions. The hydroelectric dam sells power, but at subsidized rates that barely cover operating costs. The logic was, build infrastructure, then unlock economic growth, then tax revenues increase, then pay back loans. But that only works if the economy grows fast enough, and if your export revenues stay stable. Zambia's problem? Around 70 to 75% of exports were copper. When copper prices collapsed, the entire model disintegrated. Watch what happened to the debt. 2010, external debt relatively low, manageable as percentage of GDP 2015. Debt rising, warning signs starting 2019. Central government external debt, around $12.7 billion, approximately 87% of GDP. November 2020. Central government external debt around $12.7 billion. Total public debt approximately $17 billion. Around 120% of GDP crisis. By the time Zambia defaulted, here's who held the debt. Chinese official bilateral creditors. Around $3 to $3.4 billion. Approximately 27% of central government external debt. Total Chinese exposure, including state-owned enterprises and private loans, was higher. Eurobonds, around $3 billion, held primarily by US and UK, institutional investors, and pension funds. Multilateral lenders, IMF, World Bank, African Development Bank, Paris Club, and other bilateral creditors. Commercial banks. March 2020. COVID-19. Lockdowns spread globally. Copper mines across Zambia shut down. Global industrial demand for copper collapsed overnight. Watch what happened to copper prices. January 2020. Around $6,200 per ton. Then, March hit. Copper crashed to around $4,371 per ton. A roughly 30% drop in 8 weeks. For a country where 70 to 75% of export revenue comes from copper, this was catastrophic. Then came the currency crisis. The Zambian kwacha depreciated significantly, from around 14 kwacha per US dollar in 2019 to about 27 kwacha per dollar by 2023. Since most of Zambia's debt was denominated in dollars, this made the debt burden even heavier. November 13th, 2020. Zambia missed a $42.5 million Eurobond coupon payment. Officially, Zambia was in default, the first African country to default on its debt during the COVID era. Zambia's poverty rate would climb dramatically, reaching as high as 64% by 2022, under the $2.15 per day international poverty line, up from lower pre-crisis levels. August 2021 brought a political earthquake. Hakainde Hichilema, a businessman and economist who had run for president 5 times and lost every time, finally won in a landslide. The election was a referendum on the debt crisis. Hichilema's mandate was clear: fix the debt crisis, restore economic stability, and get Zambia back on track. He immediately hired top-tier international advisors, Lazard for financial restructuring and White & Case for legal counsel. When you're restructuring debt across multiple creditor classes, you need technical credibility. The negotiating table was crowded, Chinese creditors holding around $3 to $3.4 billion in official bilateral government debt, China Exim Bank, China Development Bank, and others. Eurobond holders, with around $3 billion outstanding, primarily US and UK, institutional investors, and pension funds. The IMF, offering a $1.3 billion extended credit facility bailout, but conditional on comprehensive debt restructuring and painful economic reforms. June 2024, the Eurobond restructuring. Eurobond holders agreed to a 37.5% principal haircut on the approximately $3 billion outstanding. October 2024, the Chinese creditor agreements. Here's where the debt trap narrative gets tested. China did not take a principal haircut. Instead, maturities were extended by 20 to 30 years, pushing repayment obligations out to 2045 and beyond. Interest rates were slashed dramatically, down to 1 to 2%. Principal obligations were deferred rather than forgiven. DRC has the world's largest cobalt reserves. Zambia is Africa's second largest copper producer, with production around 800,000 to 882,000 tons annually, about 4% of global copper output. Current copper prices, around $9,600 to $10,000 per ton in December 2025. If copper had stayed at these levels during 2020 to 2022, Zambia likely wouldn't have defaulted. Instead, the crash to around $4,371 destroyed the fiscal model. For investors, Zambia was China's first major African default with complete restructuring. 4 years from default to agreement, Chinese creditors took approximately 37% NPV losses, but no principal haircuts. No assets were seized. The debt trap narrative proved false in this confirmed case. For African governments, Zambia built infrastructure, but collapsed when copper crashed, because 70 to 75% of exports depended on one commodity. Tariffs up 60%. Poverty reaching 64% by 2022, now estimated 54 to 64%. The lessons: never depend on one commodity for 70% plus of exports. Infrastructure debt needs revenue-generating investments. The recovery is real but fragile. Copper around $9,600 to $10,000. Production targeting 800,000 to 882,000 tons. Economy growing 4.7 to 6.6%. Kwacha at around 22 per dollar. But debt service still substantial. Elections loom in 2026. The test: will Zambia maintain discipline when copper prices are high? Next week, the U.S. Lobito Corridor. Should African countries trust these new infrastructure promises? Subscribe for the complete series. Thanks for watching.